Okay, guys, welcome back to the channel. All right, we currently have 23 minutes to the bell. So not bad, just coming on here to see if, we'll go over some things, go over some economic data, the usual stuff. The bond yields, we'll go over the VIX, we'll go over the dollar, and we'll go over some economic calendar things possibly coming up. And I'm going to also go over, which was extremely frustrating, but I'm also going to go over my terrible, awful, no good, disgusting trading morning. Didn't hit anything. I think I was 0 for 4, 0 for 3, max loss. So my trading for the day has come to an end, and the day hasn't even started. And I'll go over what I was trading because you're probably wondering, how is your trading over 22 minutes before the market even opens? It's because I came in today and I was so, I don't know if it was impatient, but I guess you can say that. Yeah, I guess you can say I was impatient and just jumped right in. I had to jump right in. Saw a chart, saw I knew everything about that, and just had to jump in for no reason. So it is what it is. These things happen. That's why I always say to manage your risk, to follow your rules, and to take profit out of the market, which is none of what I've done today. So let me just take off some of this stuff. A little cold out this morning, as you can see by my parka that I have on. You know, have some coffee here, just hanging out with you guys. If you jump in here, let me know on the chat. Let me know if my volume's okay as well, and then we'll get into it. It's a little low. Testing, testing. Rob, is it okay? I wasn't talking there for a minute. I can make it a little bit louder if you want. Let me increase this a little bit. A little bit better. A little bit better. All right, I'm gonna go over these numbers here. We got 20 minutes to the bell. April, what's going on? Good morning. And by the way, happy Thanksgiving to everyone out there. Thanks, Rob. Yeah, so happy Thanksgiving to everyone, your families. Enjoy the time with your friends. Enjoy the time with your family. Take some time off of the market. And then Friday, we have a very short day. So the market closes at 1 o'clock on Friday. So if you're trading options, you have until 1:15 p.m. Eastern Standard Time on Friday if you take Friday expiration. So just be careful with that. Be careful with trying to swing options. You're losing days here. You're losing a lot of trading hours. And you also have FOMC today at 2 p.m. Eastern Standard Time. All right, so let's get into what we've seen here so far with the market. And then I'll go into my just disgusting day. But you know what? It is what it is. Not every day is a green day. So you got to show your losses, you got to show your wins. You have to just, continue to move on. So at 8:30, we saw the jobless claims come in, and we also saw the initial jobless claims, which were at 240K. That's a very, very big number. All right. That means that the labor market is definitely going to start to see some weakness. Durable good orders up, core durable goods orders up. Meaning the customer's still spending, right? But the jobless claims are starting to tick higher. Now, I think that overall, the Fed is waiting for the labor market to crack, and unfortunately, if that happens, it's just not good. It's not good for the overall market. I know, as we're trading, we're day trading, we're looking for the right now, right? And while weakness in the labor market is good for the Fed in that they won't continue to raise rates as aggressively because what they're doing is working on a lagging basis, it doesn't seem like it's good for 2023, 2024. You can see a recession if you get that labor market and unemployment up a lot. Unemployment going up is not good. There's a lot of people that get hurt out there with that. It's not just those high paying jobs that people will be getting laid off of. So that's not good. That's not good for the overall economy. And in 30 minutes from now, we have some manufacturing and then the Michigan consumer sentiment, which tends to move markets as well. That stuff comes in at 10 o'clock right here and 9:45 for the manufacturing. And then going down, you have the Fed minutes coming out. Where is that? Right here at 1400, 2 p.m. Eastern Standard. You have the FOMC meeting minutes. That could definitely move markets. So there's a lot today. There's just a lot today to watch as far as the economic calendars go. The bond yields, this is what you're looking at right here. The 10-year, 3.74. The 3-month, 4.32. I go over this every time because that's a very inverted yield curve. And that always precedes a recession. So, keep that in mind. As the 10-year keeps coming down, this 10-year is coming down based on the economy weakening. All right. And that's what we're seeing here as those short-term yields continue to rise. All right. You're over 4.5% on the 2-year. These are attractive places to park money. All right. If you can get these yields from a government-backed treasury note, guaranteed by the government, and grab this for 3 months, 6 months, 1 year, why not do that if you're in an uncertain stock market? So a lot more money will start to go into the bonds. So that's that. Let's see, coming over to, hate to do it, but you guys can see here on the MES futures, you can probably tell where I took a trade here, right? As we were, starting to grind up higher here, I got in at the trend line, and the trend line did not hold up. Trend lines are good for, overall, like we see on the SPY for the year. They're good, but like I said, in the pre-market, especially ahead of economic data, honestly, I don't know what I was thinking. I should have never been trading before this. But we all make mistakes. We're not perfect. Now, this $100 loss is absolutely nothing to what I really am down. So I'm going to show you guys here because I traded a bunch of other stuff. That's where I'm sitting for the day. So while I made over $1,000 the other day, I'm now down $750. And what was I trading? I was trading the treasury bonds, which I don't normally do, but I was interested in that. And of course, I got in way too early, and I'll pull that up. I got in way too early as this trend line. This is what I saw. I saw this continue to go up. I got in, it pulled back, I got stopped out. And now, if I was still in that trade, I mean, this is just a couple $1,000 difference here if I was still in my long position instead of getting out. So, some of these instruments, because this one moves really, each tick on this futures is $35. Each tick is $35. So these are huge amounts of money that trade this bond futures. All right. So I was just following the trend. You guys can see here down here on the 5-minute. This is the trend. Unfortunately, right, there's a lot of chop in between. There's a lot of chop where you can get stopped out because you're just not going to sit in a huge drawdown. Some traders can do that. I personally don't enjoy that. So I got to cut my losses. But that wasn't it. Yeah, Rob, wait until you see this next one. So that wasn't it. That wasn't the worst of my day. The worst was trading garbage up here. Now, I liked the float. I liked the volume. I liked that, a lot of others were looking at this, but this stock right here is what I traded in the pre-market. Where do you think I got in? I got in on this pullback here, looking for a breakout. This is not the type of market for that. I know better, and you got to cut your losses. My first trade, 2,000 shares, had to cut my loss. Next trade on this bounce, had to cut my loss. So then, obviously it comes right back up to my entry. But you're just not going to sit through this for that long. At least I'm not going to. In my opinion, trading momentum, if the move doesn't go the way that you think it's going to go, based on your experience in the market and trading this stuff, you have to just cut the loss. As bad as it is, you just have to cut the loss. I know people that will buy 4,000 shares. They'll be holding the bag and just waiting until later in the day. They'll be waiting until Friday. They'll wait until Monday, Tuesday, and now half their account is getting drained out because these stocks, they always revert. They always go back, to where they came from. So you got to get that, take advantage of those first moves up. And didn't do a good job at that. Like I said, came in this morning and started just going crazy, taking both guns out of the holster and just start buying everything. And, got what I deserved. Is anybody watching anything in particular today? Any stocks on watch for you guys today? I have a couple charts I want to go over on AMD, Tesla, and Coin. But I really would have liked to see, and it might happen, might still happen, but I would have liked to see the SPY hold up over 400. And, we're kind of around there, selling off around there, but 400 has been really that tough spot to get around. So looking at it on the daily chart, like I show you guys all the time, if everyone is expecting something to happen, right? So this downtrend line you have here, this is technically perfect, right? Technically, this is a perfect downtrend line. The 200 moving average technically has been just on the money. Now, you almost think that this has to be tested at some point, just like a magnet. And once it gets there, who knows what's going to happen? But what if it doesn't get there, right? What if everybody thinks it's going to get there and then doesn't, and we end up pulling back? Don't know, obviously, don't have a crystal ball. But 400 on the SPY is that very, very clear level, all right? Now, when the SPY on the daily chart, when it pulled on back on this day to 390, this was a very, very good sign. When that pulled back to 390, opening, gapping down lower, and then closing higher, that was a good sign. That was previous, right here, previous resistance, then it was support on the breakout. This was our summer rally that pulled on back, hit that, and then broke out further. Same thing's happening here. We're trying to dig our way out. We break out, we pull on back to that exact same level. And you can see all over here, that's been a key level. So that was a good spot for a bounce. Now we're coming into that top end here. We really are going to need 400 and 4,000 on the S&P 500 to break big and actually hold up for this next move up. On the SPY would be the 405, this 410 area on S&P 500, SPX. This would be around the 4100 as well. All right, so that's what we're looking at with the SPY. I do want to show you guys, because a couple of these indicators I use are looking very similar to this back here, because this trading back here is very similar to this when you start to break out nice little bear market rallies. The 20 EMA is crossing over the 50. The 20 EMA crossed over the 50. The last time we saw that, the market continued higher. So it broke, and now let's see, is the market going to continue higher? I know a lot of people are going to be putting in shorts here. Will they get squeezed out, or will the same thing happen here that happened last time, hit it to the penny, and really sold off dramatically? Just not sure. But these are things to watch. Yeah, Theta is definitely a killer, right? That's time on options. That's why a lot of us trade futures. You don't get that theta burn if you're trading futures. But yes, I mean, when you're trading this type of consolidation, it's very difficult. Very difficult. It's almost better just taking specific stocks off of supply, off of demand. All right, let's look at some of these right now. We got 5 minutes to the bell, so I got to make this quick if you guys are crazy enough to trade the open. So Tesla, guys, I mean, just look at this down here on the relative strength. This is not a great sign. All right, as we're making those lower lows on the RSI, but we are at very oversold levels. When we get there, we seem to get a little bit of a bounce. When we get there, we get a little bit of a bounce. Right back here, when you get there, you get a little bit of a bounce. Now, if we're trying to take advantage of that for a day trade, now you see what the dailies look like. You see how gross this chart looks like. But if you are looking for a bounce, you got to come in and start to look at the lower time frame. So really quickly, Tesla has this ability here, and it goes on technicals. You can see here the low here back a couple of days ago, right? I'm just going to put that in, was the close here. So we sold off, and then that was then resistance, right? So right back here, we're seeing some support for 2 days in a row, all right? This is a possibility for that extension going up. But you can see back here, same thing. What was the low for the day was then resistance the day before. What was the low for the day was then resistance the day before that. All right, you see these, how Tesla has been trading? All right, well, now it's held up a little bit. So if it could come back down to maybe around this area to look for a bounce, that would be our best option to get long. For a quick trade around 171, if the market pulls back, if Tesla pulls back. But who knows if that's going to happen right off the open. Sometimes these moves can be pretty fast. All right. But then your next resistance will be right up here at about 177 on Tesla. Really quickly, AMD, pulling up the daily chart on this one. So you have a downtrend line. You can see back here in that summer rally, it kind of just bounced along this trend line a million times. Came up to it, rejected, but has held up, and now we're going to be basically opening up into that trend line. So what are we going to want to wait and see? We're going to want to see this trend line break first before we get really excited about AMD. What this is doing though, this is showing a very nice, from right up here, a very nice cup with a handle pattern. So you have a cup and handle, but then you have this downtrend line that has been relevant here for an entire year. So just be aware of that. While this is a nice cup handle pattern for a breakout, you got to see this downtrend line break first. Somebody had mentioned Google, so we'll take a look at that. All right, looks like I have some drawings on here from previous. For me, Google is more of a long-term buy. I think this is valued very good. As far as day trading it, it just simply does not move enough. And if you're trading options, it just doesn't really move enough to warrant a lot of that. All right, here's the bell here. Let's see what the market does off the bat. I'm going to watch Tesla down here. Let's see if Tesla could come down. Remember, we're going to want to see 400 really break hard. Nice push through 400 on SPY. Be careful not to get trapped though. I want to see this thing hold up. The safest place would be over 401. Oh yeah, I wanted to look at Alibaba. Alibaba. Was wondering if this was going to be a fade play. It's opening over the 50-day moving average on the daily chart. Looks like 76 is around 76, 76.50 is support. Big move on XLE here right off the open. Opened up right into this chart. It's holding up so nicely. It's just it wants to break out. Maybe on the second attempt it will. I took a short here and covered down here at the low. That was a very good, nice short trade. But the reason why I got out, and I told you guys, is because there was support down here, right? You can just see that that's where this consolidation is happening. Apple's holding up nice, but this is a tough spot for Apple. Has been for a while. This 150 area has been resistance the last 2 days. Maybe if we can break out of that with the market, maybe the market can be stronger too. Here comes Tesla down to this pre-market pivot down here. See what happens with that. SPY looking good. Let's go. Hold over that. Good start for the markets. Just hope that it's not a bull trap. Very good start. Nice, Rob. I would have went long there too. If I wasn't in timeout, I would have went long there as well. Once that 400 held up there, looking at the MES, you could have really definitely taken that one. Nice. Nice green candles there. That's what we want to see. But for how long is it going to last? I feel like today is either going to be one of those breakout days, or since it is ahead of the FOMC, and guys, keep in mind in 9 minutes you have some manufacturing data coming out. When we're trading futures, we always need to know when this is coming out. So right here in 8 minutes from now, manufacturing. If anybody just tuned in recently and you're wondering why I'm not trading right now, it's because I hit max loss. I hit max loss today, down 750. not a great feeling going into Thanksgiving and the holiday. But it is what it is. I know my mistakes. I know the mistakes I made, and the key is to try not to make them again. But I know that they'll be made again. You just have to make mistakes less than um, you normally would, because you're always going to make mistakes. The best traders make mistakes. It happens. Don't beat yourself up over it. Just try your best to not continue to compound those mistakes. So if I wanted to today, and I don't know how many of you guys do too, but if I wanted to today, I could make today a horrendous day. It's already bad, but you guys know that it could be way worse. It could be way worse. You can continue to trade. You can continue to revenge trade. I want that money back. I want that 750 back. And then it's all of a sudden 1,000. And then all of a sudden you're trying to get that back. And now your trading has changed, right? How many times do you guys go down into a hole and your trading changes? You hold things a little bit longer. You don't take that scalp that you normally would, all right? And then you end up going down even more. So if your trading starts to change and your edge starts to change because you're already in a hole, that is exactly what not to do. All right. And we've all been there before. That's why you should have those rules. All right. Market coming up to Globex highs. Is that Globex highs? Let me check. It looks like, yeah, Globex highs up here at about 40.20. Boom. Hit that 40.20. You can see here the Globex highs here is the high right here at 401. Really nice push. If the market pushes out of this consolidation, that's going to be, obviously a good sign for the bulls. But the last couple days have been very low volume. So just keep that in mind. I don't know how many of you were trading last year, but during Christmas, we saw a nice rally, the Santa rally, but it was on such low volume and just sold off immediately going into the new year. All right, so you got your first little rejection here at the Globex high, around that 40.20. So now if you consolidate under this a little bit, maybe it could punch through. Three minutes until some data comes out. And again, if you're just tuning in recently, happy Thanksgiving to everyone out there. I do appreciate you guys watching this stuff and the support that you're giving the channel. I'm very thankful for you guys. Brad, you mean SMA? The SMA is at 405 right now on the daily. One minute until data. Manufacturing. Brad, by the way, I tend to agree with you on that. I don't think people are realizing, the fact that recession is almost a given. I don't It's being priced in on the bond market with the curve inversion. I just don't see it's not being priced um, in the overall market. As far as I'm concerned, companies are still making some pretty good some earnings, and they're holding up their guidance. I don't know. That's why I like technicals. I like technical analysis because the charts are telling me, Brad, what you're writing there. I totally agree. We are in a downtrend for the year. Until that breaks, and even if it does break, since everybody's looking at that, it could be a head fake. So just there's a lot of things to be careful about. All right, let's see what this is. This should come out right here. This is what I'm looking at. And then I want to see the reaction on the market, if there is a reaction. All right, there you go. Terrible economic numbers. Terrible economic numbers, guys, has been good for the market. It's been a Fed market, which I think is just so funny. Is nobody seeing the fact that the economy is not doing great? Is nobody seeing the fact that you can't go to a store and buy the food that you used to be able to buy? It's taking real money out of people's pockets. So we see unemployment um, going up today, right? We see manufacturing going down, right? These are bad economic numbers. So if you were in a normal market, this wouldn't be great. The market would be down on based on that stuff. But in the upside down world, this is good for the market for the short term. Hey Rob, Goldman has said so many different price targets over the last year. Why couldn't they just tell us at the beginning of last year what their price target was going to be? Which they did, and every single person was wrong. I mean, not everyone, but a lot of people are calling for 32, 3,300 on the S&P 500. Bad news is good news, right? Bad news is good news. And by the way, this goes back to market structure as well. And knowing what type of market you're in, knowing what type of market you're in is so important because you'll get a market that's oversold, right? Really oversold. And you'll get great news. You'll get really good news, and the market will actually drop because it's already overbought. I don't know if I said oversold, but if you have a market that's really overbought at the time, all of a sudden that market structure can start to change where good news is bad news is bad news. It doesn't matter. But in a market like this, it's a little bit different. You were we were coming from such a not a low level, but sentiment in the overall market was so bad, so oversold, right? We saw what did we see the other week? That normal so Poland gets hit with a missile and the stock market goes up. That's market structure. That shows you a strong market. All right. When things like that happen, and it does, the crypto market, perfect example. You have the crypto market. Yeah, I see that rip. But you have the crypto market just totally falling apart, and our stock market's going up. Normally, when Poland gets hit with a missile and the crypto market, a huge market like that, especially for big guys that lost a lot of money, retail traders, you would normally see the market pull on back. But the market structure right now is strong. And you can just take a look at the daily chart for that. We've been making a series of higher highs, higher lows as we just come out of that bottom. Very, very reminiscent of the summer. Very similar trading to the summer, like I showed you guys here. This is the daily chart. If you guys are new, I always take my cues from the daily chart to try to predict, because we don't know, but we're trying to use technical analysis to predict where we see the market going. And this pullback here, like I showed you guys at the beginning of the video, this pullback gap down to support, that was resistance. That was support, support, and resistance. And saw that big move up. That was a very, very bullish sign. Very bullish sign. Now, now it looks like we want to break out. We'll see if the move holds up. And then you have all this overhead supply here. You have a bunch of technical reasons why the market will start to get shorted here. But maybe we see a year-end rally. Who knows? Wait until this stuff happens first before trying to predict and get into something. Wait until it actually happens and then retests. Those retests are good. So like here, the breakout, don't chase the breakout into resistance. Wait for the pullback, right? Wait for the pullback, see what happens here, and then go long. Don't always in this market try to be buying a breakout. Looking good, SPY. Looking good, S&P 500. Very solid. SPX. So close to that 200 moving average. Can that get hit today? 30 points away. So if you see the market up almost 60 today on S&P 500, you will be coming right to that 200 moving average. We all remember what happened the last time we touched this to the penny. So just about 30 points away, about 40 points away or so. Can that all happen today? I don't know. Remember, you guys have FOMC today at 2 o'clock also. And in 8 minutes, you have the Michigan consumer sentiment coming out. Rob, what do you mean this can't hold on a Min's day? Oh, Fed minutes. Got it. Sorry. Fed minutes. I just think the FOMC minutes, it's 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 coming from the past. Like the meeting already happened. While it does tend to move the markets a little bit, it's really old. We've had CPI since then. We've had PPI since then. We've had labor numbers, manufacturing numbers since then. All right? So all of that talk can change. Yeah, nice call. Nice call, Rob. I missed the home sales there at the bottom here. We'll see that in about 6 minutes. Good call. Yep. I mean, the day before a holiday, I mean, the day before a holiday and Friday being, look at the bond yields coming down. So why did the bond yields come down? Really quickly, the bond yields came down because the thought is the Fed is not going to have to go as aggressive because you get some bad economic data. This has been the playbook all year long. All year long. Bonds down when economic data is soft, predicting that the Fed will all of a sudden start to pause and pull back. Just not going to happen. Going to really need to see jobs numbers, unemployment numbers really start to tick up. And then even then, what market structure will we be in at that point? Because then all investors are going to start to look at and think about is now recession. So it's going to depend on the market structure at that point. Where are we on the market? Where are we going to be on the market at that point? It's all about market structure. You can see the market, it goes in waves. When everybody is so fearful that RSI is so low, that's the times to buy on the daily chart. When people are thinking this is the greatest market, but you're so overbought on the RSI, that's the time to short the market. All right, you can see here the RSI on the SPX. This has been a nice climb out, making higher highs, higher lows. Looks like it wants to keep going. But, like I've said 3 million times already, this is what we're coming into. But everybody knows that. Everybody sees that. Every trader is looking at that level. So, I don't know. Your guess is as good as mine. Oh, wait, we got that? All right. 3 minutes or so. Yeah, so Brad, exactly right. That's exactly 1000% right. But the algorithms don't care. So much trading is done by algorithms. You can see here, I'm sure you're aware, but I'm just going to, for new traders, that algo spike that you see here, that first move, this is a 1 minute candle. See that big green volume there? That's an algo spike. So at 2 p.m., when minutes are released, you'll get algo spikes. They're trading against each other. They're trading against other computers. Look at this nice 9 EMA. So when you have momentum, the 9 EMA is such a nice trade for momentum. and it doesn't last long. Most of the time, I mean, the market's not going to keep going straight up. Eventually, VWAP will be tested, but if it is and it holds up, and you see some volume come in on VWAP on the SPY, that's a very good sign that the market wants to continue to be bullish for the day. All right, so 2 minutes. Home sales, 2 minutes. Consumer sentiment. Consumer sentiment is actually a big deal. It shows how entrenched they think that inflation is for the consumer. It's just a study that they do. So that will be interesting right there. Expectations for the 5-year inflation. They're expecting it at 3%. The Fed wants to get it down to 2%. Honestly, I don't see how that's possible without really, really hurting the economy. Prices are just way too high. While people's savings are looking good after, COVID, not everybody's, but that savings eventually evaporates. Inflation takes a lot of that money out of your pocket. I just paid an oil bill. I have right here. I just paid an oil bill. I got 150 gallons, and I paid 5.4, so $5.40 for oil. Now, I have a price ceiling on that. The normal price probably would have been over $6. That's going to take a ton of money away from people. Just heating your house. Any second on those numbers now. Oh, man. Haven't eaten breakfast yet. Just came right into the screen, started jumping into trades like a maniac. Now my stomach is growling. It's very mad at me. There you go. Huh. Wow. Look at those new home sales. There you go with the algo. Isn't that something, guys? This is why you need to know when economic data comes out. Crazy. Those home sales were really high. So people are buying homes and they're paying a high mortgage rate. What's going to happen when those same people start to hit a recession? And unfortunately, some will lose jobs. Look at that 1 minute candle. Nice dollar a share move. Yeah. I just don't know. In this market, Rob, the market structure just seems, unless we get a head fake up here, we did break out of 4,000 on the SPX. That's a pretty big deal. We just have to see if it holds up. But we'll see. Guys, thank you for, tuning in and staying with me this long. It was fun hanging out. I can't believe I've been live almost an hour. It does not feel like that. But everybody have a great Thanksgiving. Now, for me, I'm going to be watching my Giants. My New York Giants, unfortunately, are not going into this Thanksgiving Day game healthy, and they're not going in with any momentum. And they're playing a team, the Cowboys, that are healthy and have momentum. So we'll see what happens. But that's what I'll be doing tomorrow, eating so much food, watching so much football, and drinking some nice red wine. All right, thanks. Brad, thanks for joining us, buddy. Everybody else that has been watching, thank you so much. Have a great Thanksgiving with your family and friends, and I'll see you back in here on Friday. Take care, guys.